There has been plenty of talk of stock market bubbles over the past few years, and it's been so consistently a high topic of discussion that I think people are beginning to get numb to the true ridiculousness of the current market. So today, I want to talk about the recent Rivian IPO, which saw the company reach a $100 billion valuation, yes, billion with a B, on its first day on the stock market, also making it the biggest IPO of 2021. So you might be surprised to hear that with that in mind, the business has basically produced no revenue yet, let alone any profit. That's right, a business just listed on the markets for $100 billion and basically has no business behind it. And it actually wouldn't be the first time that a business has reached a $100 billion valuation on the stock market with basically no business behind it. That business was Yahoo in the year 2000. So I want to talk about the Rivian IPO itself in today's video, but also make a contrast and compare to the Yahoo IPO and the life of Yahoo over the years from 1994 when it was founded all the way up into the mid 2010s when it was finally acquired and the business kind of reached its public end. And I'll tell you now, it was not pretty for Yahoo. So today's video is just going to be another example of the ridiculousness that's going on in the stock market at the moment. So if you do get some value out of today's video, some value or entertainment, hopefully a combination of both, then make sure you leave a like on the video. Hit subscribe if you want to stay up to date with content that I post in the future. And you can also let me know your thoughts down in the comment section. I'll be answering questions and comments as this video goes live. So with that said, let's jump into the video. Let's start this video by giving you a brief understanding of Rivian as a business leading up to its IPO, its initial public offering. Rivian was founded in 2009 and is an American electric vehicle manufacturer. The company is building 3 vehicles, an electric SUV, a pickup truck, and an electric van, with all 3 vehicles being delivered to customers for the first time in 2021. The company is very, very early stage and has ambitious plans for the future, but as of where we are right now, just as the business has IPO'd, which we'll talk about in just a moment, the company has only delivered 150 vehicles in total, 150 vehicles, which is, a long way from some of its other automotive competitors in the United States. You have Ford, which has delivered over 4 million vehicles last year, and even Tesla, which is, in the same realm as Rivian, electric vehicle maker and a relatively new automaker, particularly in the United States, has delivered 500,000 vehicles in the latest financial year. Also similar to Tesla, Rivian is planning on building a charging network as well, similar to Tesla's supercharging network. And the company has some major backers from big companies, including Amazon and even Ford. Amazon, as of October this year, held 22% of the outstanding shares. So Amazon is not some small investor. I think I mentioned it a little bit later, but they've invested in total over $1 billion into this company. They own over a fifth, almost a quarter of this business. So Amazon has been a serious part of this business, and it's also a reason why so many investors, retail investors in particular, have been attracted towards investing in this company, reassured in some way that Amazon has made such a sizable investment. 5 days ago, Rivian went public on the NASDAQ with an offering price of $78 per share. An initial public offering is the first time that a company's shares are listed publicly and can be traded on a public exchange, in this case, the NASDAQ. Private companies go public when they need access to capital, right? When they need money. If a business doesn't need money, usually they will stay private because in a lot of cases, it's just better to be private. But if they need access to capital, and this could be for a couple of reasons, one could be because they need money to survive. So in Rivian's case, they don't produce any revenue, let alone any profit. So they're just burning money every single year, which means they need constant access to new funds. Historically, they've been able to do that from private investors, but now they need access to public funding. They need more money in order to expand their business. And that's actually the other reason why a lot of businesses go from private to public, is maybe not because they just want to survive and they need money to keep going, but they also might want extra capital from the public in order to invest and accelerate their investment and growth plans in the future. As I mentioned, as a private business, Rivian was getting access to some capital, but most of it was actually coming from a single investor, which was Amazon. As I mentioned, they own 22% of Rivian. And in exchange for that ownership, they've invested $1.3 billion into the company. And that is a lot of money, but as a private business, there's only so much equity you can give out before it's not going to be worth the amount of money that you're getting in return. And particularly because IPOs are so popular at the moment and there's so much money flowing around on the public markets, they decided to go public. And by going public this week, they were able to raise $12 to $14 billion, which is obviously a substantial amount more than they could even raise from Amazon in exchange for 22% of the company. So they launched at $78 per share, and that price shot up on the day and closed at $173 per share. And today, about a week after the IPO, the stock is already at $149 per share, giving the company a market capitalization today of $127 billion. And this size of this business, given the fact that it produces no revenue, but regardless of how much revenue it produces, the fact that a business goes public and receives a $127 billion valuation should not be understated in any way. And I mean, we can just draw some direct comparisons to some of the other automakers, but you could honestly compare this business to almost any business on the stock market and it would seem ridiculously expensive. But this IPO means that it is now the second largest, or second most valuable, I should say, automaker in the United States, only after Tesla. So keep in mind, we have Ford, which is a US automaker that produced and sold 4 million vehicles, I think 4.2 million vehicles last year, and had revenue of $127 billion. Funnily enough, the market cap of Rivian at the moment. But even that business, $127 billion of revenue, had a market cap of just $77 billion. So the market right now is saying Rivian, a company that has produced only 150 vehicles, is worth twice as much as Ford, a 100-year-old automaker that is producing 4 million vehicles a year and over $100 billion in revenue. And whenever companies have insane valuations, say a business has a price to earnings ratio, a price for the business above its earnings, that is about 50 times above its earnings, a lot of the time people will say, yes, it's really expensive. I mean, the average PE for the market historically is 15, so you're paying, a 4 times multiple above what you would historically normally be willing to pay for a business. But this business is going to grow at 50% per year for the next 10 years. Its profits are going to skyrocket, and as a result, its price actually isn't that bad. Even in that circumstance, I wouldn't be making that bet, because maybe there's a 0.1% chance that you're right, that you've just selected the one business out of thousands of businesses that's going to go on and grow at 50% per year for the next 10 or 15 years. But sure, at least there's a 0.1% chance that that comes true. In Rivian's case, you're talking about a business that doesn't produce anything, and it has a $100 billion valuation. It is complete insanity. This stock could legitimately drop 99.9% of its value. It could just go down 99.9% over the next week, and I would probably still say this business is overvalued. And that says something. And Amazon, being an investor in the business, I'm sure a lot of people look at that and say, yes, I also want to invest in the business that Amazon is backing heavily. Well, Amazon wasn't paying the same price as you were at IPO. Amazon's $1.3 billion investment, that represents 22% ownership in the company, is now worth over $20 billion. That represents a 18x on their money already. So Amazon's already made their amazing return. In order for Rivian at its current valuation to make you any kind of return, a double of your money, they need to start producing some revenue, and they need to start producing some profit, and a lot of it. Now, the purpose of this video isn't just to laugh at the ridiculousness of Rivian in of itself. I mean, that's kind of part of the video, but I also want to compare Rivian to another business that had a ridiculous valuation about 20 years ago, and that company is Yahoo. Now, Yahoo's initial public offering was not the craziest. It wasn't $100 billion right out the bat. The company was founded in 1994. A couple of years later, in 1996, it went public with a value of about $848 million. So its valuation was, just shy of $1 billion. So a lot cheaper than Rivian on its IPO, but it was still insanely overvalued. The business was only producing about $1 million in revenue, and it was having a loss of about $600,000 per year. So still the business was priced insanely high. But of course, Yahoo IPO'd on the stock market a couple of years prior to the craziness that was the end of the dot-com bubble. The dot-com bubble really started to ramp up in the really late 90s, 1998, all the way into 2000, where there were thousands of IPOs that were just ridiculous. And it was during that period that Yahoo stock price started to explode. By mid-1999, the stock was climbing very, very quickly. It had reached a valuation of $40 billion, and less than a year later, in early 2000, it surpassed $110 billion. So unlike Rivian, Yahoo's crazy stock price took a couple of years to wind up, but it also took less than a year to unravel. By mid-2001, the dot-com bubble had burst and Yahoo stock fell over 95%. A decade later, it was acquired by Verizon for just $4 billion, meaning over the course of the decade, Yahoo fell from $115 billion of value down 97%. So what's the lesson here? Well, the truth is about Rivian is that I have no idea what's going to happen to Rivian stock in the future. Nobody really knows what's going to happen to stocks like Rivian. There's no timeline for how bubbles burst or how or when or even if, right? It's entirely possible, I guess, it's a lottery ticket chance of possibility that the business becomes a huge business and does deserve a $100 billion valuation one day. And let's say it becomes worth $100 billion in 20 years, then the stock price could technically just stay flat for 20 years. It's never happened before, but it could happen, and the value of the business could rise to reflect the value of the business, right? So who am I to say what will actually happen with Rivian, except that the odds here say that there's going to be a serious collapse in its price. And what we do know is that in the stock market, things often have a way of repeating themselves. Things kind of happen in cycles, particularly around human investor behavior, emotional investor behavior. And there have been another time in history, about 20 years ago, around the time Yahoo's bubble burst, where there were hundreds and thousands of businesses that had huge valuations with basically no business behind them. And we know exactly what happened to that because we can look back in history. And even though it was only a segment of the market, internet companies that were insanely overvalued during that time, it collapsed the entire stock market. And for some businesses, of course, it wasn't as bad as a 95, 97% drop that Yahoo experienced, but for the businesses that received those extreme, ridiculous valuations right at the end of the bubble, like I think Rivian, it was not pretty. Those businesses didn't just lose 50%, they didn't just lose 40%, they lost almost their entire value. And what I'm seeing at the moment is a lot of people that seem really comfortable investing right now because we just had a serious stock market crash. I think people are thinking that, well, there was only one really serious crash between 2009 and 2021. So since we just had one, the next few years should be fine. And that's just not how the stock market works. Because what matters is not the amount of time between crashes. What matters is the market conditions that exist right now. And market conditions right now are far from fine. Inflation just hit 6.2% in the US, the highest in 30 years. Interest rates are at rock bottom and have only one way to go. And stock market valuations are higher than they were before the pandemic, despite many parts of the world still recovering and individuals, businesses, and governments loaded up with more debt than ever. So while I have no idea what's going to happen with the broad stock market or the US economy over the next couple of years, I have no idea, and I've never claimed to know when a bubble is coming or when a crash is coming or anything like that. But what I do know is that I am not comfortable investing in stock prices that exist at these levels right now. And that doesn't mean that there's never an opportunity. There can be unique opportunities, individual businesses that are going down and are undervalued while we have an overall overvalued market. But certainly as the market looks right now and has progressed over the past 6 to 12 months, things are starting to look really ugly, and on a broad scale, things are not getting better. But I'd love to hear your thoughts on the Rivian IPO. Do you think it deserves its valuation? Can you justify a $127 billion valuation for Rivian? Or do you agree with me that it's just complete insanity and that we may be seeing the tipping point of what we kind of saw maybe 20 years ago, where there was a lot of money flowing into speculative businesses in the stock market? So I'd love to hear your thoughts down in the comment section. As I said at the start of the video, leave a like on the video if you got some value out of it, and hit subscribe if you want to stay up to date with content that I post in the future. But with that said, hope you guys have a great day, and I'll see you in the next video.